Alright guys, welcome back to the channel. Hope everyone's having a great week. Hope everyone's being profitable this week. And I'm just going to go over what I'm up to this week, my updates, because I know I haven't put a video up since Friday to show my profits for last week and for December. But it's a new year and a new week, and I got into some new things. So let's begin by showing what I'm in right now, what I'm currently in right now, and what positions I did take two more positions that I just closed out, and I'll get to those after. But I am currently holding two spreads. They both expire on Friday. Still holding this covered call, which I'm doing extremely well with, but on the bad side, because I'm doing good in a covered call, that means that the shares I'm holding have dropped. But I'm not too worried about that because this is a long-term hold, so it's not really a big deal. Once COVID's over and sailing gets back in order, then NCLH and the rest of the big cruise line companies should go back to at least their pre-COVID average trading prices. Around, for NCLH, it's around like $50 to $55. So I am holding an Amazon 3340 by 3335 put debit. So basically, what I did, so I bought this on Monday. I got in two positions on Monday. So basically what I did was, I've been doing call debit spreads which are bullish. So for a call debit spread, I'll go over this again and in every video. The price is around $31.81. So you pick a price where you want, where you think Amazon's going to stay above. Say you think it's going to stay above 3,100. So basically, you would buy the call that below. You would sell the call where you think it's going to stay above. So I'd go one call below that, and I'd buy the 30.95, right? So I bought that, buy the 30.95, sell the 3,100. That creates a call debit spread. That's $450 right now. It has a $5 spread, which means max gain is $500 minus what you paid for it. So right now, if you were to get around $460, you can make $40 off this contract. If you were to get in 10 of them, that'd be $400. So I basically did the complete opposite. I'm bearish on Amazon this week. So what I did was, here's the price. I went above the price, and I'm in the 3,340 by 3,335. So you go to the puts, and you'd pick a strike where you think this stock is going to stay below. So I like to go way outside the money. So here's my 7 and 7. So I have 7 contracts. So I bought the 3340 put, and I sold the 3335 put. So bought that, sold that. That puts you into a put debit spread. Right now, the price of it, you can't buy, it's a $5 spread, but why would you want to buy this? Because max is 500 and it's trading for that much. So it's too far out of the money at this point. I mean, you probably could get under 5, if you put in a limit and just wait. It's just the price is fluctuating like crazy. So basically, in a put debit, you want the price to stay below $3,335 for max profit. So I'm in this. Let's go to Webull. So this is Amazon, and I bought this put debit January 4th at 10:14. So January 4th, right here. 10:14 is right in between these two candles. So I drew a line. So I bought this put debit. I got a price of $4.30. I'll go over the price after. Here's where we're at right now. So this put debit is definitely going in the right direction. You want the stock to go down. So I bought it up here around 32.30. Price right now is at 31.80. And here's my line. Over the next 2 days, here's Friday the 8th, we can't go above this line. Has to stay below this line. Anywhere below this line. It could go right up and tap it. As long as it stays below this line and expires worthless, then I keep the difference. And so I got an average cost of $4.30 with a $5 spread. Like I said, $5 spread, $33.40 minus $33.35, so it's a $500 max profit. I got these for so I have 7 contracts times 500, so $3,500 max profit. I paid $4.30, so $430 a contract times 7 is $3,010. So 3,500 minus 3,010. So max profit is $490. It's looking good right now. If it starts to rally up over the next 2 days, then I'll try to exit the trade. Once it gets, if it goes over the line where I paid for it, I'll try to get out with a profit. It'll be a small profit, but I should be able to get out with a profit. If it stays below, around where I bought it, once I get into this range in between these two, then I'll come up with a plan to exit. I mean, depending where it is and what day it is. If it's just going over it on Friday, then I'll probably just try to let it expire. But that's how I'm managing these positions. This is just a week-long hold, but I'll take $490. Now, the bad side about trading Amazon is I have 7 contracts and the underlying price is very expensive for the stock. So the SEC fees for this trade alone will probably be at least $50. I'm thinking $40, $50. So if I take max profit, $490 minus 50, I might only walk away with $430. But if Friday comes and the price stays down here and I could exit for $450 profit, I'm probably just going to exit this trade. I'm going to try and close it out for $450 and go from there. So that's trade 1 that I'm in. The second trade is a NEO 50.5 by 51 call debit spread. So I need the stock to stay above 51. I got in this trade January 5th. So yesterday, around 12:30 on the dot. So I'm going to draw a line, horizontal line. 12:30. So let's just call it this candle, probably around the close. No, probably closer to the open. Let's call it right there. So I picked this trade up yesterday. This is a call debit, so I want the price to stay above $51, because this price that you get it at, $53.28, the only thing that this tells you is what you're going to pay for the contracts at this time. Right now, this price is irrelevant. This price is totally irrelevant. It has nothing to do with the only price that you have to look at when you're in a spread is your strike prices. On a call debit, you're bullish. So the only price I'm looking at, this is a 50.5 by 51. So $51. I need this to stay above $51 by Friday. I paid $33 a piece. I bought 3 of them, so it cost me $99. It's a $5 spread, so it's 50 times 3 is 150 is max, minus what I paid, 99. So total profit could be 51 bucks. Alright, so that's it for that one. Now, those are the 2 that are open. So on Monday, let's just go to my account, history. So 99, this is the one I'm in right now, it's open. And then the Amazon's open. So $52.50. So I was in another Neo call debit and a SPY that I opened and closed. So here's a Neo call debit that so the first Neo call debit I opened on Monday also, and I bought 2 contracts for $20 a piece, so the total was $40. The spread is 50 cents, so it's $50 times 2 is 100. So my max profit would have been 60 bucks. The only thing was, this was a closer to the money spread. Same thing, called debit, but instead of what I have now, which is what I have right now is a is a 50.5 by 51. This one that I got in on January 4th was a 52 by 52.50. So if you go to Neo, I bought this one January 4th. And I bought this around 12.16. So 12.15. So I bought it right around here. Right around 52.50. That's why it was a lot cheaper, because it was so close to the money. So on yesterday around 12:22, since I have the times exactly, 12:20, the price was at over 53. I sold this for $10 profit. So here I'll go. So I bought it for 40, the Neo call debit, and I sold it right here for 50. I got filled two contracts for $50. So I made $10 on that. The reason why I sold this was because if I can get in a more conservative trade and have around the same profit, I was looking at the prices of Neo, the 50.5 by 51, which is way further out of the money, and my profit would be $50 max on that. Then why not close this out for $10? Because my profit on this one would have been $60, but it would have had a way easier chance of hitting 52.50. So I closed this out. I took the $10 and I opened up with the settled funds. I opened up a further out of the money one. And same thing, the profit for this cost me $100, but I bought 3 of them, and the profit is going to be $51 max profit plus the 10 I made on the other one, so $60. So this is a no-brainer to take this trade and just add in the $10 I made from the last Neo trade, because now I'm bringing down my average from 52.50 to 50 to 51. So if you go here, here's 51. So by Friday, the first Neo call I took the $10 on, the price would have to stay above 52.50. So right here, price would have to stay above 52.50 for max profit. So I took the $10, opened up this spread. So now the price needs to stay above 51. This will make $50 max profit, plus the 10 is going to be 60. This max profit was 60 anyways. So they're kind of the same. I thought it out when I was doing this whole thing, and it just made sense. So that's what I did for that. And then a new strategy I'm going to come up with for my last spread that I got in and out of was a SPY. And what I like about the SPY is Robinhood doesn't let you buy 0 date expiration spreads. So you can buy 1 day before, 2 day before, and SPY has Wednesday and Friday expirations. So what I did was, yesterday, on January 5th, is this SPY? Yeah, so on January 5th, which is right here, around 12:15, I bought a contract. I bought 1 SPY contract around 12:15. So right about here, the price was hovering around 370. So I bought a 361 by 362. Let's see, right here. So January 5th, 2021, just like I said, the price is around $370. I bought 1 361 by 362 call debit spread. I'm expiring on Wednesday, so I bought it yesterday, expires today. I paid $88. The spread is $10. The spread's $1. I'm sorry. The spread is 61 by 62 is $1, so it's $100. So max profit would have been $12, as long as the price stays above 362 by today. So max profit was $12. So I ended up throwing a limit order to sell $10 profit. So instead of selling at $1, I threw a limit to sell 98 cents and I got filled. So I made $10 off that trade and $10 off the other Neo trade so far. So SPY. So like I said, 370 was around the price. And then I sold today at 1230. I'm sorry, not at 1230. I sold it at 1025. So exactly the same time I bought it yesterday. So 1025, the price was about 373. So a couple dollars above. But the strike that I bought was 361 by 362. So if I go to a 10-minute, 361, we're talking way down here. So I could have, this thing would have made me money. I could have let it expire, but I think that the fees would have cost me $2 anyways. So why not close it out and avoid the fees and Robinhood having to exercise and assign me to get the profit when I could just take $10 profit now. So that was my thought behind that, and that's what I did. So that's basically, so I'm going to let the rest of these plays play out for the rest of the week. So here's what I sold at 98. So I made $10 on this, $10 on the Neo. And then these two are looking good. Neo right now is 54.06, and I need to stay above 51. Amazon's right now is 31.81. I need to stay below 33.35. So I'm way out of range from both of these contracts to expire Friday. So I'll have another good week if these expire Friday. I'm not getting anything else. Have $109 of buying power left. Not taking any more trades for the week. But next week, and here's how I'm doing so far. I'm over $6,000 now. And my buying power was like, it'll probably be close to $4,000 if all these plays play out. So next week, my plan is to try and trade the SPY twice. The day before expiration, take a couple contracts and use half of my buying power on Tuesday and half my buying power on Thursday, and make some pretty far out of the money debit or put debit or call debit spreads, and just see what happens, because it's easy to predict. It's easier to predict a day before expiration over buying these on Monday and they expire on Friday. Amazon has a tendency to move sideways, but it could also make big moves. So I mean, this was my spread last week that I made money on. So that's a big move in that's one day. You're talking 31.84 to 33. So it's like $120 move in one day. So never say never. Just because I'm buying these strikes way outside. I mean, I have today and 2 more days for Amazon to get up here. It could happen. I could have 2 green candles like this and it could push through, but once we get through where I bought it at, I'll start managing the trade, and if I get out with $100 or even if I get out with break even, it's not a big deal. I'm trying to grow the account, and I haven't had any losses since I've been doing this strategy so far. Oh, actually I had one on SPCE, but that was it. all my other trades are played out. Just looking at the daily chart and just trying to, set in trend lines and use your moving averages and volume and try to figure out. Plus the news helps out a lot. Just try to figure out which direction, and I'm playing the direction. So instead of playing the actual price itself, I'm playing, alright, I don't think that, I'm speculating that stock ABC is going to stay below this number by this time. Or I'm speculating that stock ABC will stay above this price by this time. And that's basically how I'm doing the strategy. But next week, like I said, I'm going to try the SPY 1 or 2 days before expiration and see how that goes. But that's going to be it for the video. If you guys aren't subscribed and you like the content, hit the subscribe button, hit the like button. Is there anything else I need to go over? I think that's just about it. Oh, I got into this Dodge crypto, this fake meme, this meme cryptocurrency. When it hit 1 cent, I'm just gonna hang on to this. So I ended up buying $19 worth of this stock, of this Dogecoin. It hit 1 cent, so I bought $19. I got like 17. How much of this stuff do I have? 1,746. So I'm just gonna hang on to this. If this thing goes to zero and I lose $19, oh well. It is what it is. Not really a big deal. But I'm just gonna hang on to that. See what happens. But that's gonna be it for the video, guys. I'll see you guys in the next one.